Hi, Jonathan York by Financial Partners, looking at investment markets. Certainly been a pretty interesting start to the year. So obviously the big news has been the regime change instigated by President Trump in Venezuela. Now supposedly that was all about stopping drugs coming into the US, but it very quickly turned to oil. Venezuela has some of the largest reserves, if not the largest reserves in the world of crude oil. The problem is, in terms of sort of quality, it's sort of regarded as pretty sort of dirty oil and very hard to get out of the ground and refine. And because of that, it trades potentially around sort of $5 to $6 at least below WTI. But Trump is claiming this as a great sort of success, and US companies are now going to go in and extract the oil and obviously make quite a bit of money. What was quite interesting when he had the meeting at the White House with the big US oil companies, it was a lukewarm response. Indeed, one of the companies said that Venezuela was uninvestable, which Trump immediately turned around and said, well, we'd actually probably just exclude them because I wasn't really happy with their response. Now, the other big story as well is obviously Fed Chair Powell. There is now a criminal investigation into him. Now, that's quite ironic because apparently Trump knew nothing about this. Now, that's quite ironic because Trump has spent the last sort of 9 months really criticizing and sort of complaining that Fed Chair Powell and the Fed haven't lowered rates aggressively enough to where he feels they should be. Now, this has drawn widespread condemnation, not just from within the US and sort of previous Fed chairs, but also central bankers around the world. As it appears to be a clear indication that Trump is trying to politicize the Federal Reserve. You know, the Fed needs to remain independent because it sets monetary policy for the good of the US economy, not just on a political whim for the president. Now, adding to this as well is quite interesting because Jay Powell's term as Fed chair comes up for expiration in May, and it's unlikely that he will be reappointed. And again, quite ironic, really, because Trump is sort of criticizing Powell left, right, and centre, saying don't know why Biden appointed him. Trump actually appointed him in his first term. But after May 2026, Powell's term actually continues until 2028 as a Fed governor. So that will be very interesting to see how this all sort of plays out. But in terms of the data, it's again sort of quite interesting because the delayed GDP data from the US came out for December that was 4.3 for the US economy, which again, is a pretty reasonable growth rate. And, at that sort of level, you don't need to be cutting interest rates further. Although what was quite interesting in that GDP report that the prices index was up to around 3.8. And again, Trump continuously reiterates that he has killed inflation. Inflation is dead. There's no inflation in the US. But yet the latest CPI data came out, and it was slightly better than anticipated at 2.6 on the core versus 2.7. But that's still well above the Fed's target of 2%. Also as well, obviously 2026, you've got the midterms in November, and it's going to be very interesting to see how that sort of plays out. Because, Trump is sort of hinting that potentially with the money coming in from the tariffs, there will then be around a $2,000 dividend given out to US consumers. And supposedly that will be towards the end of the year. Now again, quite where this money is coming from, because the money that's been gained from tariffs so far is around sort of $600 billion approximately. But he's claiming it's sort of trillions of dollars, and he's already given out a defense dividend of $1,700. But apparently that was money that was already appropriated by Congress for the military. So certainly pretty interesting times in the US as we head into earnings season as well. And again, the sort of key component with earnings will not just be how they actually sort of come out, but the guidance given by the major US corporations. Now again, rates in the US really haven't moved too much. That 10-year is hovering around sort of 417, and that's just below the key level of 420. 30-year is 484, and the 2-year is 354. And also as well, obviously you've got Trump making noises about Greenland as well, and potentially doing it either the easy way or the hard way. Which again would just ride roughshod over international law, as Greenland is not part of the US. Now oil has just spiked a little bit higher here, back above $60, currently around 61.40 and change, and that's really on the back of potential supply issues coming out of Iran. Now in the UK, that base rate cut just before Christmas, taking the base rate down to 375, was sort of much appreciated and really needed for the UK economy. And now it's just a question of how much lower UK rates can go. Although again, there are signs that the UK economy is starting to sort of pick itself up, obviously coming from a very low base. Now in the EU, that inflation data coming out for December was actually pretty encouraging, just around 2%. And if we're going to hold there for the next sort of couple of months, then potentially we could see a further cut from the ECB. Now after the last meeting from the Reserve Bank in Australia, they sort of indicated the rates are on hold and potentially they have finished the interest rate cutting cycle. So now it'll just be interesting to see what happens with inflation over the next sort of 2 to 3 months, because if it does continue to fall, then the Australian economy it's doing okay, but it's not really sort of roaring ahead. Potentially, there is still some talk that you may just see one further cut. Although obviously it's going to be interesting to see the impact of the recent sort of wildfires on the Australian economy, but also as well the cyclone up in North Queensland. Now here in New Zealand, the sort of latest surveys, both from business and also consumers, are showing a sort of encouraging signs, a little bit more optimism coming through. Now again, they were coming from pretty low rates, but looking at it, there is some sort of cautious optimism for the New Zealand economy over the sort of first part of 2026. You've got falling rates, you've got a housing market that's starting to pick up. With those falling rates, mortgages are going to be reset over the next sort of 3 to 6 months. are going to be reset at substantially lower levels, which will obviously see much more disposable income in the New Zealand economy. But added to that as well, you've got around $140 billion of term deposits. And obviously with rates falling, some of those term deposits will not be rolled over. And we'll be looking for a new home, which potentially could be beneficial for New Zealand equities. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.